Coming up today, stocks closed just under all-time highs on a massive bearish to bullish flip. Stocks set to benefit from Stargate, why I think it could be the year of the robot, other emerging themes in the market, a look at Trump's key executive orders, his meme coin, latest threat to Russia, what to expect from China, and what I got up to on my vacation. It's the first daily market review of 2025. We're going to have a great year, guys. Let's go. And a warm welcome back, everybody, to your favorite finance channel, Click Capital. Hope you're all doing well out there. I haven't made a daily market review in a bit over a month, as I've been on vacation, and stick with me today. I'll tell you later on in this video what I did and the related stocks to my vacation. I think you'll find that interesting. And for those of you new here, I may have forgot who I am. Just a quick intro. My name is Jared. I've been trading and investing in markets for 20 plus years. I previously worked for an investment bank. Now run my own financial research and education company called Click Capital. And what makes me different from all the other YouTubers out there is I actually put my money where my mouth is. Everybody these days has a trading service. However, with all my stock picks, swing alerts that I share here in these videos for free, and also on my paid services, I invest in myself with my own money, and always let my members know in advance what trades I'll be making the next day, along with 100% transparent performance tracking of my real money accounts. And believe me, I was watching markets every day whilst on vacation, and breadth was weak. I was waiting for the turn. It looks like we've just got that. Coming into Trump's inauguration, and now it's dramatically improved like I'm about to show you. And just before I perform some market and volatility analysis for you, in addition to letting you know what I did on vacation, stick with me today, and I'll also show you a list of smaller stocks I think could perform well this year on the back of an emerging trend, including one I've just invested in and I'm quite excited about. So we'll take a look at that business, their website and chart later on. And it's kind of fitting I start my first show of the year with S&P 500 sitting just below all-time highs, 6086. That was my last video I posted there on the 20th of December. And I thought it was another buy the dip opportunity. We did bounce for a few days there. However, as you guys know, it was weak for a few weeks after that. And just looking at a 1 month sector performance chart, we can see that. A few days before Christmas, then we kind of just rolled over, starting the new year off, which actually turned a lot of people bearish. Might surprise a few to know that energy's out the front here, by over 10% in the last month. We can also see that in my sector breadth table indicator. Energy, the best performing sector, 72% of stocks above their 50-day moving average. Still a little mixed out there though, so we've still got rotations going on. However, that's normal to see in a bull market. And just turning on my economic trends table indicator, we've actually just flipped bullish. We did have a few bearish readings there a couple of months ago. However, things are shaping up quite nicely here, fundamentally and technically as well. Just looking at the percentage of S&P 500 stocks above their 200-day average, actually weakened quite a bit going into the first couple of weeks of this year. Actually went below 50%, percentage stocks above their long-term average. That was the lowest reading we had in well over a year actually, ever since the market's made a pretty good bottom in October 23. However, that's bounced back now. We've had volatility come in as well. The VIX just sitting above 15 and volatility risk premium actually gone negative. That's a good sign. Option dealers writing their contracts at lower implied volatilities than what the market's actually moving around at. And we can see that big bearish to bullish flip in this chart here of stocks making new highs versus new lows. Just looking 5, 6, 7, 8 days ago. Large caps, mid caps, and small caps. The percentage of stocks at 1, 3, 6, and 12-month lows had been increasing. However, we've done a big flip here to bullish, which I don't think it's a coincidence that it happened coming into Trump's inauguration and continuing today, second day of trading with the new admin. And we're just broken a record percentage of consecutive days with more than 68% advancing stocks. That's a really good sign. Also, the McClellan oscillator went from negative 120 to plus 100 within 30 days. Looking back in history, that's really good. 96% of the time, we're higher a year later. It's always a good sign in the market when we go from really negative breadth to really bullish breadth. Shows a strong bounce underneath the hood of the market. And there's a look at the S&P 500 heat map year to date. We are mostly green there. We've got Apple pulling back, which was surprising to see late last year how strong it had been trading, as it still hasn't proven to get back to good growth yet. And there's a look at the daily chart on Apple, trying to find support around here at 220. We've got their earnings coming out next Thursday, which we'll be paying attention to as we get into the thick of earnings season now that we're a few weeks into the new quarter. But apart from Apple and a few of those healthcare stocks, overall looks like we've got some broad and bullish breadth across the board, which is a good sign to start the year. And like I said, I was keeping up with the markets whilst on vacation. And because everyone could see that bearish breadth, we were getting quite a bit of bearish sentiment out there. We could see that in the investors' intelligence. In fact, the percentage of bears spiked the hardest it has done this entire new bull market, now going into its third year. Bit of a pullback and bullish sentiment as well. Also saw that in the AAPL Investor Sentiment Survey, the last reading a week ago, climbed up to 40.6. That was a one-year high. The amount of bearish investors out there, and of course that's when the market flipped. But if you're following the fundamentals, there wasn't really any solid reason for the market to continue selling off, other than maybe a little bit of FUD, fear, uncertainty, and doubt going into the handover of power in the States. And I'd say a bit of a relief that we haven't heard much about tariffs either, and stick with me because I'll get into that in a minute, along with a few other things Trump has got the ball rolling on. But we're also getting other stats like a negative monthly return in December, which we got. The market was down about 3%, and then a positive return for January, which we're still yet to see. However, it's looking likely at this stage. The index has never closed lower 7 and 8 months later, which takes us into that kind of bearish seasonal period of Q3. August, September, October, when we can see some volatility before the usually bullish Q4. And so far, just looking at earnings, pretty good. Still early days, only 53 companies reported, 75% of them beating. Really strong surprise though, 8.9%. That's pretty good. Also looking back in history, stocks have done quite well in the first year of a new term. You have to go back to 2001 when George Bush Jr. first came into office. Market was down 13% for that year. Other than that, the other 9 years out of the last 10, market did pretty well. Most of them put in solid double digits. And I know we've just done 2 consecutive years of 20% plus returns. I think we'd surprise a lot of people if we did that again. Who knows, maybe we could do a 30% year. Imagine that. Quite often in the late stage of bull markets is when you get those big accelerations, the biggest returns. May not always just revert to the mean. We certainly have animal spirits alive and well. Still a ton of dry powder out there. 6.8 trillion in money market funds. Some of it's actually come out lately, probably gone into the stock market. Corporate buybacks look to be on track for another record year. Talking in dollar terms, but also as a percentage of the S&P 500 market cap. Even with the huge market cap we're at now, we're already tracking similar levels to prior years. Companies buying back their own shares, that's a strong tailwind. Stepping back and looking at the big picture over the last 100 years, this secular bull market that broke out to new highs in 2013, now going into its 12th year. Looking back in history, the last time we had a secular bull, 1980 to 2000, that was 20 years. Prior to that, 1950 to 66, that was 16 years. If we were to do 16 years again, that would take us to 2029. But like a lot of us that lived through the GFC, that's left psychological hangover effects, and every year since then, there's always been a strong chorus of those calling for the top, to which they'll eventually be right. However, as it stands, we're still in the midst of secular bull market. You don't need to overthink it. So many people get caught up in the day-to-day noise, worried about the market pulling back 10 to 20%. They end up missing out on the secular 1000% returns. But no doubt we're not cheap here, especially in the States. Record high valuations, which doesn't mean they're just going to revert back to the mean because they're at a record high. If anything, it means there's a lot of momentum in the market, could very well accelerate. But if you wanted to hedge your bets in US stocks, Chinese stocks, some of the cheapest they've ever been as well, low correlation to the States. They've been in a multi-year bear market, so it'll be interesting to see whether China bounces back this year. Also, commodity stocks can make a good hedge. I'll touch on that a bit later as well. But we may see a little bit of softness in the next few months, just looking back in history. The median S&P return going into and out of a US election and from inauguration, we can consolidate for a little bit and even go sideways. But just like billionaire Druckenmiller said recently, we've gone from the most anti-business administration to the most pro-business administration. Trump watches the market daily, and I don't think he wants to see a crash on his clock. He's going to do everything in his power to hold this market up and make it accelerate. And like he keeps saying, he wants to unlock the golden age of America. And certainly a lot of CEOs and businesses are rallying around that. CEO confidence is really high, along with CapEx spending, another huge tailwind. And in fact, the market is already tracking on a no recession path. Looking at S&P 500 performance. After the day of the first cut from the Fed, this is what you could call a soft cutting cycle, maybe similar to the mid-1990s. Cutting because they can, not because they have to. That's a good sign for the market. Cost of capital coming down, whilst growth is still holding up. And a few interesting charts here. The percentage of time the economy spends in a recession has been on a steady decline these last 100 years. In fact, in the 2010s, for the first time ever, we didn't get any technical recessions. However, a lot of people look at this chart and believe we're in for a massive reversion to the mean for no other reason than 120 years ago it was a lot worse, therefore we should go back to it. However, I argue economies and markets have become more sophisticated, more efficient, along with the Federal Reserve doing a better job at its impact on markets as well. And with recessions becoming more and more rare, that translates into less time stocks spend in a bear market, which has steadily declined over the last 120 years as well. And so if you thought CapEx was big the last couple of years, one of the big themes of the market, hyperscalers, mega cap tech spending huge on AI. Like I'd been arguing last year, American exceptionalism may be accelerating on the upside, and we just got the first sign of that on Trump's first day in office, Stargate project. $500 billion to be invested in AI infrastructure in the United States. Initial equity funders, SoftBank, OpenAI, Oracle, and MGX. Also got ARM, Microsoft, NVDA, along with Oracle and OpenAI as key initial technology partners. That's a pretty big deal. That is an ocean of money to be invested in the United States. That's going to have ripple-on effects to many, many industries. We've got Larry Ellison here right behind it, one of the top 5 richest men in the world. He created Oracle, pretty much the world's biggest database company, who's big into cloud, data centers, big believer in AI. He's also a big shareholder in Tesla. And it was interesting to see that on day one, this big project announced by Trump, and they're already talking about cancer vaccine. One would have thought with RFK, the new admin would be bad for vaccine. However, if you look at what RFK said about vaccines, he doesn't want to ban them outright. He just wants them to be more closely studied so we know what the effects are, especially with these new ones, the mRNA ones, which I think is a valid concern. But it was interesting to see that RFK has held investments in biotech, CRISPR Therapeutics, one of them, which actually got a pretty good rally today, along with a few others in the space. One of the biggest being Moderna, and I know this is a really controversial subject with valid concerns on both sides, so I'm not going to go into it too much. However, I can say I'm a long-term shareholder in Moderna, and this isn't something I've just started recently. Anybody that bought my course that I made a year and a half ago knows that my big bull thesis for Moderna was the promise of cancer vaccines, personalized cancer vaccine, now based on AI. You can study your own DNA, work out where the kinks are, and correct it. And this might sound crazy, but I think Moderna could be a top 10 company within the next 10, 20 years. Currently only got a market cap 14.8 billion. Recently, there's been a lot of heavy accumulation in the stock. Had been sold off really hard, unsurprisingly, going into the new admin. Like I said, perception was vaccines are going to be no good. They're going to be held back. However, on day one of Trump's new term, $500 billion project, and they're really talking about using AI to create personalized vaccine, which, like I said, could be the future of cancer treatment in addition to disease. And of course, this is different from the COVID vaccine, which of course needs more studying. And just like any medicine or treatment, there's always risks, just like hopping in your car and driving every day. But we've got some other related stocks catching a bid here today. Verve Therapeutics, Beam, and other related ones. Immune Bio, synthetic biology stocks, which started catching a bid late last year, continuing. One I regularly mention, Ginkgo Biowork, ticker code DNA, breaking out multi-month high there. And one that just recently came onto the market, really interesting, Grail, maybe referring to the expression the Holy Grail, early stage company who are involved in the early detection of cancer. This could be another theme that plays out in the market this year, now that we've got big money behind it and key business figures talking about it. So this will be a stock we watch this year, Grail, and what's already been doing remarkably well for a few months. Just showing how much enthusiasm and momentum there is in early stage growth stocks out there. Quantum still been holding up. Did have a bit of a pullback along with the market. No doubt valuations are stretched on some of these smaller names, but fundamentally speaking, should continue to have a strong tailwind as well. The halo effects from this huge AI spending. And there's a look at popular names, D-Wave Quantum, Rigetti, also bouncing back over the last week, and one of the largest in the field, IonQ as well. But one area of the market I'm really excited about is robotics. Jensen Huang, the godfather of AI, told us himself thinks the next stage for AI is going from the software that we've all been playing around with, ChatGPT and other tools, to hardware, physical AI agents. And Tesla is one of the leading companies in the world with Optimus. A lot of people don't realize how close they are to being in full-scale commercial production. People have these things walking around their houses, doing stuff for them. Could be on the cusp of a humanoid robot revolution. And like I said, closer than most people think. Tesla is heavily invested in AI and robots, not just for their cars, robo-taxis, but for Optimus as well. We're already getting some estimates that Tesla might sell 200,000 Optimus bots by 2035. They're forecast to produce several thousand this year. Multiply that by 10 times 26, another 10 times in 27. And so like we've seen time and time before in history, Musk can set big targets to set big goals for his team. Some of them he hits, some of them he doesn't. However, one thing we've seen time and time again, people betting against them can't seem to stop losing money. As Tesla's stock price is sitting just below all-time highs it made a few weeks ago. We got earnings from them this time next week as well, we're taking a look at. But just looking at the robotics industry itself, we just got a breakout on the Robo ETF to highs we haven't seen in over a year. Pretty clean breakout there after we've been consolidating for a while. Some stocks we're keeping an eye on this year. Symbotic, involved in warehouse automation, along with some smaller ones as well. Serve Robotics, last mile food delivery, partnered with Uber Eats. And other smaller ones like RB Robotics, involved in stuff for automotive, drones and robots. Surgical Robotics, stereo taxis, another micro cap looking pretty interesting. And another nano cap, Nightscope, 50 million market cap, really small here. But they make autonomous security robots. Pretty interesting stuff. And again, part of the broader secular trend of replacing human labor with robots. This is going to overtake pretty much every part of society over the coming decade or two, in my opinion. And the future will belong to those who own the code. Everybody else will be on universal basic income. And it's kind of really limitless of how much they can eventually do. And this is why NVIDIA and AI could be a really long secular trend. And as promised earlier in the video, small robotics stock I just recently invested in. I was going to share with you guys. And please keep in mind, this is not financial advice. I'm just sharing with you my research and positions. Always do your own research. This is a highly speculative stock, and why I didn't include it in my stock picks because it's super volatile, still really low revenue, and no doubt it's going to keep moving around a lot. Richtech Robotics, market cap 361 million. And I first saw it at an event Jensen Huang was at. Had one of these robots pour him a drink. On the side of it said Richtech. And so they operate in a few different industries. They got worker robots in hospitality, serving drinks, delivery robots robots, medical deliveries, and cleaning robots, and even more on the horizon, multi-purpose, and I'm sure they're going to come out with others as well. We've only got a little bit of revenue, actually got some partnerships with Walmart, and I just think this is a really interesting trend that could be the next big thing in the market this year. Like Jensen Huang said, we're moving into physical AI. Tesla coming out with Optimus, just like as we're going into the SpaceX, is really getting the space industry going. We'll be keeping a close eye on robotics stocks this year. So if you haven't already, subscribe to Click Capital, and I'll keep you up to date on all the latest trends in the stock market. And like I said, tell you where I'm investing my money, not just playing it safe and sitting on the fence like others, because there's plenty of good trends out there. Like my members know, I'm invested in over a dozen secular trends in my stock picks portfolio. Click the link below this video if you want to check it out. Another area of the market I've been bullish on for several years, as my regular viewers know, uranium and nuclear, I think is still good for this year. I'm still invested in this sector and plan on staying invested this entire year and likely for many more years to come. We're getting positive news all over the place. Just today, South Carolina to reboot giant nuclear project to meet AI demand. And so regardless of AI, I thought the world's coming back to nuclear as well. AI has just added fuel to the fire. These data centers need huge amounts of power, and nothing can meet that demand better than nuclear. And out of all the clean energies, this is the one Trump is most pro on, nuclear. He's not big on solar, he's not big on wind. In fact, those sectors have been trading pretty weak of late, going into the election and coming out of it as well. Same with the wind ETF, actually broke down to new lows today, along with clean energy overall. However, uranium's a bit of a different story, actually breaking out there today, looking at the Global X ETF and some uranium stocks, the biggest in the world, one of the biggest in the world, Cameco, and some smaller ones catching a bid, Denison Mines, Uranium Energy Corp, Energy Fuels, and some of these smaller, more speculative ones, Lightbridge Corporation, trading pretty firm there today, and those that build reactors. The one Sam Altman's invested in, Oklo, trading really strong, along with Nano Nuclear Energy, looking set to break out to new highs here, and the stock with the ticker SMR, Small Modular Reactor, also trading up this last week. I think that could be another good sector this year on the back of the AI boom. And this is why we pay attention to what the government's doing. The biggest force in the market, the only entity that can intervene in markets, change the rules overnight. Just looking at a list of what Trump's done so far. Hasn't wasted any time, 200 plus executive orders. A lot of cultural related ones. I think we've seen peak wokeism probably 2 years ago. The world's turning its back on that, thank God. Getting back to common sense and logic. Tariffs, maybe why the market is doing good, because we haven't quite seen exactly what he's going to do with China. He's instructed a bunch of federal agencies to conduct some research. Withdrawn from the Paris Climate Accord, withdrawn from the World Health Organization. These are not too surprising. All part of the America First policies, dialing in foreign spending, renamed the Gulf of Mexico. But some of the biggest areas affected related to us investors in energy. Like I said, dialing it back on clean energy bar uranium, getting behind American domestic production of oil, reversed a ton of Joe Biden's orders. Want to see faster permits, less regulation, and the mantra of drill, baby, drill. Should keep supply of oil pretty high, which is downside pressure on the price, could actually help inflation. Not everybody's on board though. JP Morgan CEO Jamie Dimon warned that stocks are overvalued. Sounds the alarm. However, this is the type of article we see from this guy every couple of months. He should be called Mr. Caution. He's always trying to throw cold water on everything, I think. But no doubt there's some merit to what he's saying. Of course, there's always risks in the market, huge government deficits. The new admin does have a bit of a mess to sort out. Government spending, lingering inflation, geopolitical tensions. No doubt we could get a healthy 10 or 15% pullback this year at some point. But just looking at this chart from UBS, drivers of the S&P market returns based on a machine learning model, one of the most common impacts on the market is the 10-year yield. And I'd say that's what was really impacting the market to start off this year. You can see the 10-year yield was climbing pretty swiftly just after the Fed cut, bottomed at 359. A few months later, it was up at 480. It's kind of amazing the market's held up that well considering that jump in the 10-year. How it's pulled back over the last week. Market maybe got wind. We're not going to see big tariffs right off the bat. Still on an uptrend here though, 461. But one of the biggest impacts on yields is inflation, and one of the biggest impacts on inflation is oil. Trump just threatened high levels of sanctions and tariffs on imports from Russia if they did not reach a settlement to end its war against Ukraine. Starting off with a hard line, really wants to get it done. I think Putin wants to get it done as well. Probably wants to take a little Ukrainian territory, so he feels like he's won. They'll have to meet in the middle somewhere. Think it should get done. Already seen Hamas do a deal. No coincidence. Going into the new admin. Think Iran should pipe down. Otherwise, Trump should have no problem cutting them down if he has to. And there's a look at crude, which probably affected the market a little bit starting off this year as well. Shot up to $80 a barrel. Big bounce off those mid-60s. And it's pulled back just like yields this last week. Also good to see inflation pull back a little bit over the last month. It too had shot up with bond yields. Just looking at trueflation. Got up to 311 there in mid-December. Here we are. Tracking an annualized rate, 275. And this is a much better measure of actual inflation in the economy compared to anything else the government is reporting to us. And some official measures of rent have been trending down as well. And many of you be happy to know inflation in chicken wings has been coming down ever since it peaked in June last year, which funny enough is when big chicken wing restaurant Wingstop actually topped out last year as well, put in a double top there around 430. But just looking at the agricultural fund, one could still argue it's in an uptrend here, so for sure we can't say inflation has gone away. I still think that is more likely a risk this year to markets than downside recession or a spike in unemployment. Because like I said, we might have to start looking at unemployment differently now. If robots are replacing humans, maybe unemployment going up may not have the same meaning as it used to. Of course, it won't be a good thing if it spikes too hard. But a good hedge for that, as I always say, is commodity stocks. And just looking at gold stocks, their price to net asset value, some of the cheapest they've ever been. A lot of them trading below their net asset value. Some of them have gold in the ground, multiples of their market cap. So that could present a good asymmetric bet here. More upside than downside on some of these gold stocks. And there's a look at a long-term chart of gold miners versus gold ETF at the bottom of their long-term range here. So that'll make for some good portfolio diversification, some gold shares. Also interesting to see on my vacation, the incoming president of the United States launching his own meme coin, which went absolutely ballistic the day or two after he launched it. It's also a Melania coin. No doubt this is very controversial. Why he did it a few days before his presidential term is that you're not allowed to profit off the office. So it was very well timed. And to be honest, I'm still yet to determine what exactly to make of this. I have looked into it. I'm not sure if there's more than meets the eye, or is it just his family cashing in, like we see so many celebrities do, who launch their own meme coin and inevitably dump on all their followers. Got to imagine a lot of his followers may not exactly understand that, and some may actually pour a significant portion of their savings into the Trump coin, only to wake up one day, and who knows when that'll happen. Maybe not until after his presidency. This thing could turn into the Trump stock the whole time. But I got to imagine that's a unique feeling, waking up one morning, Trump coin's dumped 80-90%, and you've just been rugged by the president of the United States. But either way, that should give a pretty clear hint to what the new admin's view is going to be on crypto. They didn't just speak positively about it to win votes. Sounds like they really want the states to lead on crypto. However, we haven't heard plans of a federal strategic reserve just yet. And no doubt this will present conflicts of interest, which could be a valid criticism for the opposition. But let's just see what happens here. Again, just keeps finance really interesting for all of us. Now the president of the United States has his own meme coin. Shot up to almost $80 a coin in the first 2 days. Here it is, $37. However, his wife Melania, her coin not doing so well. And who knows, we may be on the cusp of a Barron coin, Don Jr., Eric, who knows, maybe even a Tiffany coin. But like I said, that is a huge positive for crypto and Bitcoin in general. President's family have got their own meme coins. No surprise to see Bitcoin trading strong here above 100,000. And again, if the stock market does well, AI robotics, this is just another expression of risk on liquidity. Bitcoin should do well this year too. And like I said, apart from commodity stocks, China could make for good diversification as well. They know Trump's trying to take America to a whole new level. They don't want to be left behind. So I think they're going to stimulate as much as needed to get their GDP growth going in the right direction again. In fact, they're about to hold a conference today looking to introduce measures for promoting medium and long-term capital to enter market and supporting high-quality development of capital markets. Translation, they want to pump their stock market higher. And there's a look at the China large cap ETF FXI. Still consolidating, and like I'd been saying, probably will until we really know the extent of tariffs and the market's had time to digest it. Otherwise, I'm still a long-term holder, and Alibaba and Singaporean company exposed to Chinese markets, Up Fintech, otherwise known as Tiger Brokers. I'm still a long-term holder in that as well. Interesting to see we've got the second largest rotation into European equities. Are Europe stocks going to bounce back this year to their secular underperformance versus the States? I've seen a bit of a bounce off the lows in the Euro Stoxx 50 these last couple of weeks. However, technically and especially fundamentally, I wouldn't call them out of the woods just yet. Another stock I'm a long-term holder in, Uber. Interesting to see today. They're really expanding what they can deliver to you. It's partnering with Home Depot. You want to get some tools, building materials, gardening supplies? You're about to soon order that on the Uber Eats app as they expand into more and more markets what they can deliver. And like I said, anywhere I travel in the world, I use Uber to get around and Uber Eats to deliver me food, just like I do here in Queenstown at the bottom of the world. Uber is everywhere. They're a globally dominant business. Has pulled back a bit ever since I first initiated my long-term position. However, added to the position, and at 142 billion market cap, just like Moderna, I think Uber could be a top 10 company in the next decade or two, as I pretty much think of them as the number one global transport company. And just before I show you what I did my vacation, just a quick look at the economic calendar. Really not much out this week. Just weekly jobless claims tomorrow. Going into some PMIs on Friday. Nothing too big there to mention. And the Fed priced to stay on hold all the way through June. when we may get one more cut. However, I'm not sure about that at all. The Fed very well may be done here. And the good news is they've got 425 basis points in their pocket to work with if we do run into any trouble this year. And now just wrapping up, thought I'd just touch on a bit about what I did on my vacation. A lot of you guys know I took a month off from making the daily market review. And one of the things I did, I went on a cruise with my wife and family on a Royal Caribbean's ship's called Quantum of the Seas. It was my first cruise. Really impressive. I'm sure a lot of you guys have been on a cruise before. And it pretty much just reminded me of a massive Vegas hotel on the water. You've got everything you can imagine. Restaurants, shops, casino. I even played in a poker tournament. I came third. Finished on a bad beat, which was unfortunate. However, I ended up on the tables, which was good. Had a lot of fun. Bit of shopping on board. Really good food. Exceptional service. And we actually cruised from Brisbane, Australia to Vanuatu. And they recently just had an earthquake, so we couldn't go to the main port, but they took us to Mystery Island. It's a cool island where nobody lives. Beautiful waters, beautiful swimming. With snorkeling, one of the most popular activities there. And so I got a first-hand experience of why cruises are such powerful businesses. Royal Caribbean Cruises, market cap 63 billion, and why they're getting more and more popular with people all around the world. Royal Caribbean has 67 ships. I ended up spending more on board than the cost of the ticket. Got the drinks package, went to a few premium restaurants. The complimentary food's great already, and at the casino, bit of shopping. Went and had a massage, and I'm not normally one to get upsold. However, I did after my massage, ended up getting some acupuncture. And I learned that the company that provides these services on board Royal Caribbean, One Spa World, it's actually a stock, 2 billion market cap, ticker code OSW, and pretty solid business. Just looking at the fundamentals here, increasing revenue, not a bad valuation. And it was just kind of mind-blowing how many services you could get on board. And it was exceptional service with really well-trained staff. One of the best massages I've had in my life, actually. And there's a look at Royal Caribbean. Revenues significantly bouncing back after COVID. Like I said, cruises are becoming really popular now. Other smaller company, Carnival, 31 billion market cap, and a bit smaller again, Norwegian Cruise Line. So if you haven't done a cruise, I highly recommend it. And like I said, it's pretty much a massive floating Las Vegas hotel on the water. Otherwise, that's all I got for you today, guys. Thanks very much for tuning back in with Click Capital again. I'm excited to get stuck into this year with you all. I think there's a lot of exciting trends and themes out there, and I'm going to do my best to keep you on top of them all for the remainder of this year. As always, I'm interested to hear your comments, so feel free to post them below this video, and I'll see you guys again this time tomorrow. Cheers.